All right, welcome everyone to the first agriculture section. We will start with Berber. Just a heads up, the speaker will have 20 minutes and then we will have 5 minutes for discussions and then 5 minutes for the questions. So if you have any questions, you can wait until the end.
Good. Yes, let's get started nicely on time. So I'll be presenting a paper that's called See It Grow. And in a bit, you'll understand why it's called See It Grow. So the motivation for this project is that climate change is increasing the incidence of extreme weather events. We'll hear a lot about that probably the next 3 days. And especially smallholder farmers' livelihoods are at risk from droughts and floods and other types of risks such as pests and diseases. And in that space, a lot of governments, NGOs, donors are looking into crop insurance as a way to help protect smallholder farmers' livelihoods and especially their incomes from crop production from these risks. Now, it's important to keep in mind that shocks can reduce agricultural investments and the use of inputs via two channels. One is after a shock. So if people have if crops are affected by a shock, then you'll see that people might lose their investments because of the shock. You have reduced savings, increased debt, and that might make it difficult to pay for inputs in the next season. And we're looking here at effects on fertilizer use, and so people might just not have the money for a next season to pay for inputs. But there's also a mechanism through which shocks can reduce investments in inputs, even in the absence of a shock. Just the mere risk of worrying or the mere risk of being able to lose crop production due to these shocks, just the fact that they might occur might make risk-averse farmers less inclined to invest in their production, just because they worry about the potential of their crops being affected and then not having the funds to smooth their consumption or invest in future seasons. So that channel we're focusing on in this paper. So the ex-ante effects of risk on production and investments. So agriculture insurance is really seen as a promising way to de-risk these investments, including in fertilizer. But we have seen a lot of challenges in providing insurance to smallholder farmers. The standard product that is being offered in higher income countries is in an indemnity-based insurance that pays out in case there's actual crop losses. But for smallholder farmers, that doesn't work so well because they have small land holdings, and the sum insured is relatively small. And so it doesn't make sense to send out a loss adjuster to go and verify if shocks have happened. That would just be too costly if you're talking about millions of smallholder farmers and the premiums that they could afford paying. And so as a result, we see limited supply of indemnity-based crop insurance. It's also very difficult to monitor these farmers. And so insurance companies worry a lot about what we call moral hazard, or the fact that once you have insurance cover, maybe you have less of an incentive to minimize losses. And so this is one of the reasons for why there's limited supply of indemnity-based crop insurance. So a lot of insurance programs in developing countries and for agriculture insurance have focused on index-based insurance. For instance, making payouts on the basis of a reduction in rainfall measured or based on average yields in a larger area. But the problem with that is that these indices, let's say average yields in an agroecological zone or weather outcomes, they are not really always a very good predictor for a farmer's individual losses. And so what might happen is that a farmer has individual losses that are maybe not necessarily picked up by the index. And so the farmer doesn't get a payout, but has paid for insurance. And this is what we call basis risk. And that has been found to be a large deterrent of demand for insurance. And we've seen low take-up of these products as a result of such basis risk. So then we kind of, flash forward and look at it's 2025. We have a lot of digital innovations, including in remote sensing and smartphone technology. Network is really improving in a lot of low-income countries with much better bandwidth. And so it becomes much easier now with all these technologies to monitor and observe what's going on in smallholder farmers' fields. And so when we started this project, we thought these digital innovations might be a way to, one, reduce moral hazard because it becomes easier to monitor what's going on and what investments are farmers making, but also to monitor crop losses in the field and thereby be able to reduce basis risk. So the question we're asking is, with digital innovations, can we increase insurance take-up by reducing basis risk, making these products more attractive? And can we strengthen the impacts of insurance on fertilizer use by having that reduced basis risk and people feeling they're insured, but also potentially overcoming concerns around moral hazard? So that's the motivation for this paper. A little bit about the context. So the digital innovation we're looking at is called picture-based insurance, and that's why it's called See It Grow, because this product settles claims based on pictures of insured crops. These pictures are taken from sowing to harvest, always of the same portion of the plot, which the app is designed to make sure that that is happening. And so the app that is being used for this project has really a lot of features embedded in it that help minimize tampering. Now, initially, in the current phase of the program, our implementing partners are working with agricultural experts who inspect pictures that have come in over the course of the season at multiple stages to verify whether farmers have been, one, using the right management practices, but also verifying crop damage. And if they've been using the right management practices and there's crop damage that can't really be attributed to the farmer's own sort of malpractices, then payouts can be triggered on the basis of these pictures. Over time, though, deep learning models could be used to automate that process, and already some work is going on in that space. An affirmative evaluation in India in 2019 demonstrated its feasibility, and on the basis of that, an organization in Kenya, Acre Africa, an insurance service provider, reached out to us and said, hey, we'd like to do this in Kenya, and can you work with us to implement this? So this is where the project ended up being implemented. 7 counties from 3 regions in Kenya, Western, Bungoma, and Busia, and then 3 counties, Upper Eastern, around the Mount Kenya area, and 2 more semi-arid counties in Lower Eastern, Machakos, Makueni. One of the counties in Upper Eastern, Tharaka Nithi, the places where we worked were also more semi-arid, whereas in Embu and Meru, the places where we worked, we're having a little bit more rainfall. So we categorize our counties as non-arid, semi-arid lands, so non-ASALs. That's the Western counties and Embu and Meru in Upper Eastern. And then when I speak about ASALs in this paper and in this presentation, I'll be referring to Tharaka Nithi, Machakos, Makueni. So that's how we consider sort of the distinction between these counties. Now, what's important to notice is that fertilizer use is especially low in the arid, semi-arid lands. Those are also counties that really suffered the most from a drought that took place sort of in the early 2020s. And so the insurance project will have been filling in a big gap there in terms of helping farmers hopefully manage these risks from the drought. But in this paper, we focus on ex-ante effects, not on the effects of the drought itself on fertilizer use. So I just wanted to flag that. The insurance product that Acre Africa offered, so our implementing partner in this project, it targeted maize, sorghum, and green gram farmers. And Acre Africa offered this insurance product to their farmers through what they call champion farmers, who are sort of local influencers that had been trained to provide farmers with insurance education and sell them sell different types of insurance products and services to them. The sum insured of this insurance product was equal to the cost of the seeds. So really the product was aiming to insure farmers' purchases of higher quality seeds compared to using, say, local varieties that you might get in the informal markets or recycled seed. So that's the investment that it aimed to de-risk, this investment in seeds. Now, farmers could get this product also if they weren't investing actually in higher quality seeds, which is why we still look at fertilizer use here. The premium was 10% of the sum insured, regardless of the type of product that was offered, and I'll get to that in a bit. I think that's important when we think about cost effectiveness. And finally, payouts were made via mobile money. And we have a separate paper in which we're actually finding that this is an important consideration. Not everybody might have their mobile money account. And if you make payouts into a spouse's mobile money account, demand for insurance considerably reduces. And if you want to make that payout into savings groups accounts, then you might as well just walk away because nobody is going to buy the product. So that's a companion paper. All right, more on the experimental design. Acre Africa selected and trained 180 champion farmers, one per village. In each of these are across these 7 counties. And so champion farmers are our number of clusters. So we have 180 clusters. And each champion farmer would send in pictures for about 20 project farmers. And this was done across that whole project implementation phase from about 2020 to 2022, about 4 seasons. Now, we randomly assigned these champion farmers to one of 3 treatment arms. One was the picture-based insurance, which is our main treatment of interest. So we assigned 40% of champions to that treatment arm. And in this treatment arm, champion farmers, they took pictures regularly of farmers' crops over the course of 3 or 4 seasons. And on top of that, farmers had free picture-based insurance policies. It's kind of a trial. And also for the product to be developed, because Acre Africa wanted to have this training data to develop deep learning models so that they can automate loss assessment. So that's our picture-based arm. Weather index-based insurance arm, we did exactly the same. We also had picture-based crop monitoring, but instead of picture-based insurance policies, farmers here received free trials of a weather index-based insurance product that in that case was based on rainfall. Later on, Acre Africa moved to a different policy, but I won't be talking about that here. Then there's a control group in which we didn't provide those free insurance trials. Okay, so that's the first 3 or 4 seasons. This is before we look at any outcome variables. Then what we did in the long range 2022 is the champion farmers were now selling these insurance products at just the ongoing premium rates. But then in the PBI arm, they were selling this picture-based insurance product. And in the weather index-based arm, as well as in the control group arm, they were selling the weather index-based product. Now, important is that in the 2 treatment arms, farmers could buy these products at a subsidy premium if they'd been in the project. And the subsidy was either high or low. We randomized this within villages. And in the control group, there were no subsidies. So the main comparison, if we're interested in what is the effect on take-up, is really looking at picture-based insurance versus weather index-based insurance, where both subsidies were available. If we're comparing the control group with one of these treatment arms, we would need to control for the fact that in the treatment arms, people were also receiving subsidies. Okay. Then after fertilizer application for the long range 23-22 season, when those policies were sold, we did a survey with about 10 randomly selected project farmers per champion. So about half of the project farmers that had been in the project. Okay, and baseline characteristics are mostly balanced across these 3 treatment arms. So let me jump into the results. First of all, we're finding that picture-based insurance really strongly increases insurance take-up, but especially among female farmers and in these ASAL counties where rainfall is more a concern for farmers because they have been more exposed to drought. So you see here in blue is the control group, red is weather index-based insurance, and picture-based insurance is in green. And then you see a big jump in demand for insurance or take-up, especially for women in non-ASAL counties. And if we're focusing on ASAL counties, we see, again, a big jump when we're moving from weather index-based to picture-based insurance for both women and men, but the effect, again, is largest for women. So we can do this in a regression framework. I'll just kind of quickly go through that. So we're looking at here an equation where we have a binary variable for any insurance treatment arm, picture-based insurance, so we're estimating the extra effect, a set of control variables, and we're assuming standard errors to be clustered at the champion farmer level. And then our outcome variable here is insurance take-up, but we'll be using a similar equation for fertilizer use. Then we see that the total effect of weather index-based insurance for the full sample is an increase in demand of 6.4 percentage points. So this is actually showing that just the subsidies don't do all that much, actually, because these project farmers had subsidies. They could get these insurance policies at a lower premium rate, but it doesn't even significantly increase insurance cover that much, because they were focusing here on the full sample, not just the ASALs. But the effect of picture-based insurance is much stronger. And if we would do this for women in ASALs, the effects would be strongest. So that's on insurance take-up. We also see that especially the picture-based insurance treatment increases perceptions or improves perceptions of insurance by quite a bit. So here in the red box, we're seeing the extra effect of offering PBI, so of our PBI treatment on a range of perception variables. For instance, whether they find it easy to understand, whether the product is cheap, whether they find the insurer trustworthy, whether the product is of high quality, whether the champion that is offering the product is trustworthy. And across all these domains, people in the picture-based insurance treatment just seem to be much happier with the product that they are being provided with. The only thing where we don't see significant differences is whether it pays out in time, because this has been a strong headache for the project, getting those payouts out in time, not just because the loss assessment from these pictures takes longer, which is showing how important it is to automate that process, but just also because in general, in the insurance projects that I have worked on, it just seems something always happens that is going to slow down payments, whether that's not having the right phone numbers for farmers, not having the right bank accounts, or inconsistent information from the time they signed up versus what they provide when they want to get these payouts. But there's always something. And so I think it's no surprise that farmers are quite unhappy with the speed at which these products pay out. Okay, so that's on take-up. Now we're moving to fertilizer use. So what is the effect then of increased insurance cover on fertilizer use? And what we're seeing here is, first of all, note how much lower fertilizer use just in general is in the ASAL counties. And this could really be because of that investment risk that farmers have in those counties, because they're just so much more exposed to drought. Also, I should note that it's not always optimal or recommended in all these locations to be using fertilizer, in part because fertilizer actually uses up some of the soil moisture, absorbs some of the soil moisture that then doesn't go to growth of the crops. So that's a caveat, and we want to do more analysis around what fertilizers are actually recommended in these locations, and really doing more heterogeneity analysis, looking into that. But that's an area for future work. So what we're finding is that especially among men, actually, in the ASAL counties, the insurance treatment, and here we're combining weather index-based and picture-based insurance, especially in the ASAL counties, and especially for men, offering insurance is increasing fertilizer use. For women, we see much smaller effects. But also women in the control group are already more likely to use fertilizers in these ASAL counties than men. So that's in terms of what is the overall treatment effect. Now, we're interested in estimating the average treatment effect on the treated, but insurance cover is endogenous. Ideally, we'd want to know what is the effect of our insurance treatments and of weather index-based versus picture-based insurance on those people who took up insurance. Now we have the subsidies, and I have 2 minutes left, so I'll go through this very quickly. But we have random variation within villages in whether they were offered the high or the low subsidy. And then we use that to correct for selection into insurance using a Heckman selection model. And here you see the effects of our treatment, or our average treatment effects on the treated when we're correcting for selection using that Heckman selection model. And what really strongly stands out is that weather index-based insurance has a much stronger effect than picture-based insurance on fertilizer use. And this effect is especially strong for male farmers, and again in those ASAL counties, consistent with the figure that I showed you before. But we're seeing quite large average treatment effects on the treated, and much for men in ASO counties, but much less for women and in non-ASO counties. Let me skip this so that I can get to the conclusions. But so overall, it seems picture-based insurance really improves uptake of insurance among women because of improved perceptions of product quality. And when we started the project, we had not expected this because we were worried that women might be averse to the smartphone technology nature of the project. But they actually really endorsed this, embraced it, and said, no, we want to be part of this and we want to learn more about this. And so the use of smartphone technology actually did not end up being a constraint for them to be engaging with the project. The product is also not more expensive from an underwriting perspective than weather index-based insurance. So the main cost is agents collecting these images, which then becomes a concern if we're thinking of, okay, for now the women, even if they didn't have smartphones, women in a project could participate and purchase the product and use the product. But if you were to get rid of these agents who are sending pictures, then what would happen with their participation? So we don't look into that in this paper, but that's something I think that's worth cautioning against. That here we see strong impacts for women, but that was because agents were sending in the photos and they had smartphones. So we're also seeing stronger effects of insurance on fertilizer use, especially when focusing on ASO counties and men. And so this raises questions, okay, why do women who are more likely to benefit from the product because they're more likely to take up insurance, especially picture-based insurance, why are they not benefiting and using more fertilizer? So that's a question that we haven't quite answered yet. We're looking into correlating the data that we have with women's empowerment data, for instance, mobility. Maybe they just don't have access to the transport to go and purchase fertilizer, or maybe less access to credit. And we have a wide range of indicators to look into that. That is work in progress. Also, it's important that the sum insured was actually not that high and not sufficient to cover fertilizer purchases, which is a lot more expensive than seeds. So that might be another barrier that might have affected women disproportionately. And finally, insurance and fertilizer could actually be competing expenses. And so maybe women's increased take-up of insurance meant that they had less money to purchase fertilizer. And then finally, we do see the strongest effects in the weather index-based arm, less so in the picture-based insurance arm, which might suggest that it could also have to do with incentive effects, and that the monitoring through smartphone pictures was not fully sufficient to really eliminate moral hazard. And then people said, oh, I have insurance cover. It covers me when my crop looks bad, so why would I purchase fertilizer? So there might have been another channel going on. And so those are some of the things that we're currently looking more into using the data that we have. Thanks. Sorry for going a bit over. Over to Joelle.
Okay, thank you. Hello, everyone. Thank you for your presentation and giving me the opportunity to read this very interesting paper and comment it. The general question of designing effective DG-Agri solution for agriculture is very important in Africa because there is a wide literature showing that there is mixed evidence, limited scale-up, and generally because these solutions are not enough well designed to the need of farmers. And your paper showed that when you have a product that is well designed, you have a higher take-up and potentially important outcome for farmers. So that was really interesting to read it and to see this result. Also, the non-effort problem that you raise is a very intriguing one. So yes, I don't have a proper solution or something to suggest, but yes, I really enjoy reading it. My comments, my first comment maybe is related to the description of insurance products. So you take some time to describing the PBI product. And as I'm not a specialist of insurance product, I would have liked to know more about the weather insurance product and what are the requirements for farmers to use it, what are the transaction costs, so have to have a better idea of the relative cost benefits of each product. So this is the first point. Also, a second point, you mentioned that it is required to have a bank account to benefit from the insurance, but it was a little bit blurry because I don't know if it's mobile money or if it's a bank account. A bank account, it suggests that it would be mobile banking, and the take-up of mobile banking in Kenya is much lower than mobile money. And so maybe a clarification on this would be helpful, especially since you do not provide statistics about financial inclusion of household. So it would be yes, it would be useful to have a better idea of financial inclusion of eligible household. Also, maybe a possible treatment heterogeneity, since we don't know, we don't have information about the 4G network coverage. And I think that it's an important element because the champions have to send picture, and to send picture, you have to have access to mobile broadband. And there could be difficulty to access this infrastructure. Also, there could be heterogeneity in the quality of pictures that are sent. So this is also a point that should be discussed to ensure that all champions have equal access to the infrastructure. Also, I had some question with the champions farmer. I would have appreciated have more detail about how they are chosen, what are the criteria. Why didn't you rely on agricultural cooperative? Because there could be kind of overlapping responsibilities between champions, farmers, and cooperative. So that's something that I would have liked to be discussed more. And finally, how do you deal with potential spillover effect between groups? Because it could be that farmer receiving insurance products could talk to those in the control group, and so it could alter the estimated effect that you have. So these are my main points. Thank you. Thanks a lot.
Thanks so much.
All right, we have 3 minutes for questions. So, Berber, you can choose one.
Okay, yeah. So let me just very quickly respond to one question you asked. I think the bank account requirement that might be in an infographic, and that's taken from the India case. In Kenya, it was mobile money that they needed to have. Yeah. So let me open it up for questions. Yeah.
So really interesting, Berber. I had 2 quick questions. So one is, there's this sort of implicit assumption through the presentation that you're offering a better product than the weather-based insurance, which has been plagued by these uptake issues. So can you talk a little bit about the evidence for that? Like what, because this is also relevant to the interpretation of the finding that the farmers preferred this product, right? Which is kind of a real preference evidence of that. But how much heterogeneity does this introduce within the payouts in the villages, right? So can you get at the degree to which this is decreasing the basis risk in the villages? And relatedly, can you use some of the information that you have to provide insights into this persistent question about what the barriers to uptake of the standard product are? So, because there's a couple different mechanisms that you're addressing. So one is potentially, if you can prove it, this reduction in the basis risk because you get more heterogeneity in the payouts. And then the other is, you've got somebody coming to your field multiple times during the season taking pictures who's sort of an established leader in the village. So are there conversations going on about what the product is? Are there, is it just sort of a consumer product quality, like touch point story? So can you provide some insight into these bigger questions in the literature with some of the evidence you have?
Okay, yeah, thanks. We could do more with the data that we have to look at where the payout's going. And sort of here we've been focusing more on the ex ante risk, but we can definitely exploit more. And actually we have a master's student working on this currently to bring together rainfall data and overlap that with the GPS coordinates for the households and looking at whether we see improved perceptions, especially in regions where there was drought versus no drought, to see to what extent indeed this might be driven by basis risk. On the consumer touch points, so across all the treatment arms, champions were doing the picture-based monitoring. So that's a constant in our project. And so we can't really look or disentangle, is the effect coming from increased contact, but it is controlled for in a way because it's constant across the treatments. And then also, I think in terms of getting at what are the barriers to uptake of weather index-based insurance, the analysis that we're doing with the master student and merging our data with more granular high-frequency rainfall data will hopefully also help in that regard, and overlaying that with our administrative data of where the payouts from the two products went. Yeah, thanks. Great suggestions. We're done? Okay.
Maybe after the session.
Okay. Yeah, I'll be around the next 3 days and happy to talk more. Thank you. Out of the way.
Okay, so hello again. So I'm Cariolle. I'm a researcher at the Foundation for Social Research on International Development, and I'm happy to present you my paper jointly written with David Carroll from Tufts University, which deals with mobile connectivity and rural livelihood in West Africa. So to give you an idea of the background of the study, maybe we can start mentioning the persistence of market failure and low agricultural productivity in Africa, which is a strong impediment to structural transformation, a cause of late industrialization, and also eventually a cause of premature deindustrialization. In this context, any solution or policy that would help to reduce information cost, distance cost, or other transaction costs is more than welcome, especially in West Africa, which is a region which is plagued with missing infrastructure, missing or underdeveloped financial system, and a strong exposure to a wide range of shocks, including geopolitical, climatic, and socio-political shocks. And in the context of the wide diffusion and coverage of mobile infrastructure, this could be a game-changing transformation with strong transformative impacts, since simple mobile phone are both information engine, so they allow people to have access to market information, but also financial engines. And these technologies are helpful for a wide range of sectors, from agriculture, education, health, and other sectors. So we could expect a lot from this technology diffusion. And when we look at evidence about their diffusion for agricultural outcome, actually there is, as I said earlier, mixed evidence of their impacts on agriculture. Generally, there is a problem of design and also problem of scale-up because it's often based on internet. It's costly for people, and so yes, there is mixed evidence. However, the literature generally agrees on the fact that mobile connectivity, so simple mobile phone connectivity, through a greater coverage of the mobile network, leads to a greater integration of agricultural markets. So this is something that has been observed not only in Africa, but also in India or in other developing contexts. And generally, this literature invokes supply-driven mechanisms to explain this convergence in price, because farmers are able to have a better information on price, so they are able to better allocate their supplies or to have a greater negotiating power with traders. But this literature generally overlook the fact that it could be the disintegration, this reduced dispersion in price could also be driven by local development, so by the demand. Because when cell tower arrives, it has impact not only in agriculture, but also in non-agricultural sector. This would lead to increased consumption. So this is something that has been shown in many papers. This would lead also to increase labor force participation and diversification of revenues, which would in turn lead to increased demand and potentially a catch-up effect of less developed areas towards more developed area, which would be also a potential mechanism explaining the dispersion in price. So this is basically what this paper tries to disentangle or to explore. So we try to answer two main questions. The first question that we try to answer is, does mobile connectivity spur the reduced food price dispersion at the regional scale, so in the YNU community, and for a wide range of food products, so not only agricultural products, but also other products, and could this impact be demand driven? So the contribution of the paper is the following. It proposes an analysis of the impact of mobile coverage, mobile infrastructure coverage on food price dispersion over a whole region. So this is the YNU community, which consists of 8 member states, and on this impact on food price dispersion and also on household consumption patterns. We intend to relate this pattern of reduced price dispersion to increased food demand in connected areas. So we do this using data on around almost 150 food products, which are traded around 5,000 enumeration areas, and also the contribution to revenue diversification. So we mobilize 3 strands of the literature. First, the literature on mobile connectivity and food price dispersion. Second, the literature on showing that access to mobile phone and access to mobile internet increase consumption and improve food security. And also the literature which show that access to mobile connectivity actually allow households to increase their labor force participation, especially towards off-farm activity. So we try to connect the 3 strands of the literature to provide the coherent picture of the rural transformation induced by mobile connectivity in West Africa. And one last contribution, which is more statistical, is that we have been able to gather and exploit non-standard measurement unit, which enables us to compare food product price across area. So we are able to weight what's the price per gram of each product. And we are also able to measure the consumption quantities of households. So this is also a contribution of the paper. So the data that we use is the LSMH enquête harmonisée sur les conditions de vie des ménages, which has been conducted in the YNU countries in 2018-2019, which covers almost 60,000 households, as I'd say 146 food products, around 5,000 enumeration areas, and across hundreds of districts and regions. We follow an approach in 2 steps. The first step, and we undertake a food price modeling. So we want to know what's happening when the enumeration area get closer to the network in terms of food price level and also food price dispersion. And then in the second step, we look at what happens for household when they get closer to the network and when they own mobile phone in terms of consumption, but also in terms of income diversification. So we have 2 main models. The first model is a price model, price modeling. So we express food price as a function of connectivity. We are also interested in spatial heterogeneity, in the effect of connectivity. So that's why we interact this term with the urban nature of the enumeration area. And we also include a range of control. We include a district product fixed effect, since this variable is observed at the enumeration area level. We also include a survey waves fixed effect. And then the second model look at what's happening for households. So we look at 2 types of variables. We look at food spending, also quantities of commodity consumed per household member. But also we look at quantities of each food product self-consumed and purchased. So this allows us to have a great idea of the change in consumption patterns for households that have access to mobile phone. And we are also interested in income diversification. So we look at household member labor force participation on the farm and off the farm. We also look at the number of non-agricultural enterprises in the household, the margin in unprocessed merchandise sales, because we have also this information, the sales of processed merchandise sales, like craft sales, and also total farm sales. Connectivity, I will give more detail about that. So it's a connectivity variable, which is related to the mobile network coverage. And we, in the second model, we interact it with a mobile ownership variable, which, because we are interested by the fact what's the value added, what's the benefits for also owning mobile phone and being located in an area covered by the network. So we have two main connectivity. So we use the OpenCell ID database, which give geolocalized information about the mobile network worldwide. So we look at both 2G, 3G, 4G technologies. So we're interested in all technologies because all technologies allow us all to communicate. Our main variable is based on the geographical distance to the nearest 2G plus tower in kilometers, but we construct dummy variable for households that are located within a 2 kilometer. So this is basically to give you an idea of the distance of enumeration area in the area. But we use, for the sake of easier interpretation, we use a mobile dummy variable indicating whether the enumeration area is within a 10 kilometer, 2 kilometer, radius from the cell tower. But in robustness, we use an additional variable which gives more information about the network quality. So we have the number of well-captured network in each enumeration area, and also the time since the network has been deployed, rolled out in the area. So this gives additional information on the exposure to the mobile network. And so for the household, we are interested in the number of mobile phones owned by the household when they are located in an enumeration area close to cell towers. So we control, for the model one, we control for rainfall, contemporaneous rainfall, but also average rainfall over 2015-2019. For local economic development, so nighttime light density, water, electricity infrastructure, and so on. Demographic characteristic, population density, population topography, and so on. And for household level analysis, we control for head of household characteristic, household characteristics, exposure to shocks as reported by the household in the survey, and also farm characteristics. So the change that we have is the reverse causality in the omitted variable bias. Reverse causality because enumeration area can receive cell tower because they are more developed, for example. So to address this, we employ an instrumental variable setup, which consists in explaining connectivity by the exposure to lightning strikes. So this is an IV that has got popularized in the recent years. And so the IV rationale is to say that past exposure to lightning strikes, so it's exposure from 1998 to 2013 to explain mobile coverage in 2018-19. So this past exposure alters the mobile operators rollout because it induces a lot of costs. So they tend to serve to roll out in areas that are less exposed to these shocks, this type of shocks, and also because they induce high maintenance costs and repair costs. Lightning resistant protection exists, but in sub-Saharan Africa, it is much less common to have this. So this is a big problem for the deployment of the mobile infrastructure. And we weight this variable by the population density. We follow the Guriev and Manacorda because high density area, mobile operator can be willing to roll out the mobile network even if there is exposure to the lightning. So it's important to weight by this factor. So to give you an idea, just a picture of the first stage estimates, it represents the marginal effect of the lightning variable on the distance to mobile network, which is our main variable. Also, the additional network access variable, which is the on the one hand, the earliness of the mobile network coverage and also the quality of the network coverage. And we see that the greater the lightning exposure, the higher the distance, the later the deployment of the network, and also the greater the quality of the network. And also this effect of very poorly sensitive to the inclusion of rainfall variable, because rainfall actually has the main trait for identification, because the exclusion restriction could be violated if through lightning exposure we would have a direct effect of lightning on economic activity through higher exposure to rainfall. And we can see that it is not affected by the inclusion of this variable. We do additional robustness check, but I don't think I will have the time to present them. And in addition to the ID network, we also conduct dyadic estimation. So dyadic estimation, we use this framework more specifically to study the effect of mobile network coverage on price dispersion. So we look at whether the price gap between two enumeration areas is reduced or not when these two enumeration areas are mutually connected to the network. We employ also we include controls such as the geographical bilateral distance between enumeration area, the common district location dummy, and also the local development gap. We include also enumeration area fixed effect, and we employ a three-way clustering approach. So this model is interesting because it addresses potential problem with omitted variable bias, because we are able to include enumeration area fixed effect. So this is interesting also to combine this estimation framework with the IV framework. So our results are the following. First results, the impact of mobile connectivity on price level. We observe an increase in food price, which is around a 10% increase, and which echoes the findings of the literature on this subject, since generally the literature find that when the mobile network rise, market price or producer price increase between plus 5%, plus 15%. So it seems to be consistent with the literature finding. And when we account for spatial heterogeneity, we observe that this increase in food price is actually concerning only rural areas. So that's an interesting point. What we do here is that we are not sure that we observe a price increase in rural areas, but we are not sure it's a convergence pattern, because if the price is higher in a rural area, it would lead to a divergence of price. So what we do is that we look at the price gap between enumeration areas and the average urban price observed in the district. And we separate the sample between negative gaps and positive gap, and then we run our regression. And what we see is that it's an absolute value. So there is a reduction observed in rural areas for enumeration areas that have a negative price gap compared to the urban price. So, and we do not observe this in the sample of enumeration area where food price are higher than the urban price. So this makes us think that we have a reduced food price dispersion. So this leads us to the dyadic estimation framework. And what we observe also, we have not been able to conduct the whole analysis on the YMU because it is too requiring in terms of computation capacity. So we run regression on each country separately. And what we find is that being mutually connected to the mobile network reduce food price dispersion in each country except Niger. And what we want to test now is whether food demand could explain this reduced dispersion. So we interact the connectivity variable with the variable of food spending the food spending gap in enumeration area. So this is the difference between food spending between each food spending measured in each enumeration area. And what we find is that we have a moderating effect of food spending, which is consistent and robust across different countries, which is not the case when we look at the moderating effect of food sales. We do the same thing with food sales, and we see that there is sometimes a positive moderating effect, sometimes a non-significant, sometimes a negative moderating effect. So it's not clear that sales drive our results. So that's why we look at what happened in terms of household consumption. So this is the second part of our analysis. And we observe that there is an increase for households that own mobile phone. There is an increase in food spending. So I won't comment the columns 2 to 5, but there is a negative externality for households that do not own spending. And this increase in food spending is observed more specifically in rural areas compared to urban areas. And we have similar results when we look at quantities consumed. And one interesting point is that we find that there is an increase in quantities consumed, but a decrease in self-consumed quantities. So people tend to consume more, but they rely less on self-consumption. We have an additional result is that we find an increase in the quantities of food purchased. So there is an increased resort to market transaction to consume by the household who have a mobile phone. And now, what about the mechanism? I'm going, sorry for being a little bit out of time. So the mechanism, we explore two main mechanisms. The first mechanism is financial inclusion, because as you may have seen, having a mobile phone allows you to have access to mobile money technologies, and so we're interested in that. And there is a large literature about the effect of mobile money on food consumption. And what we find is that mobile money ownership in the household explain the effect, but part of the effect, not the whole effect. And this effect is also, again, more observable in rural areas. So this is a first mechanism that could explain this higher food demand. The second mechanism is the income source diversification. So I just represented the marginal effect of connectivity and mobile connectivity for household on four main outcomes. The number of non-agricultural enterprises. So we see that there is an increase in the household of number of agricultural enterprises, more specifically for agricultural household and for rural household. We have a decrease in sales of processed merchandise. So activities like crafted seems to be subject to less engagement from the household, but we have an increase in the margin, the sales of unprocessed merchandise sales. And one last interesting result is we have also a decrease in farm sales. So from what we see, there is income diversification. All tend to quit or reduce their engagement into farm activities. They tend to reduce their engagement in processed sales activity like craft, but they increase their engagement into unprocessed sales activities, which are kind of retail or wholesale activity, which are activity that have lower value added, that are simpler to implement, but where access to market information is key. So this is an interesting pattern that has been observed in the literature, but that has not been connected to the mobile diffusion. So I have some robustness check that I won't comment, and that's maybe to conclude. To remind the results, we find that mobile network coverage reduces food price dispersion, that this price pattern are explained by a greater market demand for food products and a lower reliance on self-consumption. Part of this effect, demand effect, is explained on the one hand by financial inclusion through mobile money. And the other mechanism is the income diversification process towards trade activities. So it could be also interesting to note that this shift in activity towards trade activities could also directly affect the spatial organization of food markets, since there would be less farmer and more trader in this process. So we have not explored this question, but I think that's another interesting question to be addressed. And what we also find is that there is a negative externality for households that do not own mobile phones. So they face rising food price without being able to have access to financial products and to diversify their activity. So this is also another result that we have. Thank you so lot for your patience.
All right, thank you for the presentation. I actually enjoyed reading this work because it adds to the literature around mobile connectivity and price dispersion. But then this paper layers on issues relating to food demand. And it's an important area of research, and the researchers also used data set that covers around more than 50,000 households across 8 West African countries. And not to repeat what he already presented, but then the interesting findings from the research is basically that mobile network expansion reduces food price dispersion by driving price catch-up in connected rural areas. And the key mechanism is through non-farm income and financial inclusion, but not through farm revenue. So those are the key interesting results. So my comments around the research is basically, I have a few comments. One is around accounting for seasonality. We know that there is seasonality in prices. We also have seasonality in consumption. I think this is an interesting area that the authors should consider. And since we are also focusing on like 8 countries within the same region, you should also consider issues related to cross-border trade. Then in accounting for some household level controls, I think the researchers should consider looking at the household structure. How does the presence of children drive food demand? Who makes food decisions within the household? And also try to probably categorize the food groups into maybe high value versus low value to make it a bit more intuitive. Then there was also issue around the connectivity. I think there's really no variability in the connectivity variable. The study used the number of mobile operators that provide good reception within 2 kilometers in the agglomeration area to examine the long-term and quality effects. But then the number of mobile operators may be too small, and I don't know if we'll get good results in that area. Then around the mobile adoption, there's the variable of mobile adoption. The authors used the number of mobile phones owned in the household. If we have information on maybe ownership of smartphones versus basic or feature phones, I think that will also add to the literature. Also, the use of lightning as an instrument, I know it's been used across literature, but in the paper, it's really still not convincing in this regard. So those are my comments. Yeah, thank you.
Thanks a lot for your comments. So I try to be brief. I think you're right regarding the seasonality. We have survey-based fixed effect, but maybe we could explore more this aspect. The same way for all structure. Yes, this could be done, but the paper is already very dense, so I'm not sure it would serve the paper purpose to densify it. Maybe to explore this in another paper. Also, cross-border trade is also something that we cannot, we have not dealt with. So that's a very good point. Regarding the lack of variability in connectivity, I'm not sure I would agree because we have various connectivity variables. We use the raw distance, we use the dummy variable. We also use the number of mobile network operators. We use the number of years. The network has been expanded, arrived in the community. So we have various measures which display different level of variability, and our results are quite robust. And also regarding the exclusion restriction and the instrument validity, we spend like a lot of robustness check to ensure that there is no problem. I'm well aware that there has been a recent blog of McKinsey about that, and this has to be. We have to be very cautious with this instrument. But what we try to do is really to ensure that there is no exclusion restriction violation. So we provide some robustness check. But yes, we cannot be sure that it's totally perfectly clean. But my belief is that we did what we could with this instrument to convince the reader that our estimates are reliable. That's what I can add. Yes.
We have time for one more question.
Oh, yeah.
Yes.
So
in your results, is there any heterogeneity by the type of crops?
Yeah.
Yeah.
That's a good question. That's also something that you point that you raised. Yes, it was. We started to plan to try to categorize the food products, but they are very heterogeneous. So it would imply some kind of arbitrary choice to make proper category, because there are agricultural products, there are processed agricultural products like Cube Maggi, and sometimes some products are farmed locally but also imported, like rice. And so it was very complicated to build categories of product and to identify which kind of product are most affected.
Okay.
Yeah.
Thank you very much.
Thank you. Yes.
And it seems like cotton would be a very good example of something that shouldn't have local demand effects.
Sorry?
It seems like cotton would be something that shouldn't have any local demand effects. That might be a good example.
Yeah, what we have also, in a former version of the paper, we look at the product most affected, and we observe interesting patterns, like people tend to substitute tea with coffee. So there are some products that the consumption decrease, and other products that the consumption increase. Also, the meat, consumption of meat increase. So there is heterogeneity across products, actually. But yes, that would be interesting to go further in this matter. Yes.
Talk after.
Thank you.
Hello, everyone. Yeah, thank you for still staying to this moment. Yeah, my name is Khadijat. I'm going to present a work on the nexus between digital literacy, output market access, and demand for rural e-commerce. It's a work funded under the Feed the Future Advancing Local Leadership Innovation and Networks project. And I didn't do the work alone. A colleague from Amolegbe University in Benin works with me on this. Jenny Eka, currently at Cornell, mentored us on this project, and there's another colleague from the University of Ilorin in Nigeria. So we all know that there is a rapid digital transformation in the region, in sub-Saharan Africa, with Nigeria basically leading the pack, and all the indicators show like upward trajectory. The indicators relating to the number of individuals with mobile phones, the expansion of internet access, and on the other side, there's also growth in the e-commerce market. And in Nigeria, basically, there's a yearly growth rate of around 12% between 2021 and 2025. And the e-commerce market is valued at around 13 billion US, because basically around 70% of online transactions happen on mobile phones. On the other hand, there's also an increasing demand for food, and farmers are unable to meet this demand because they face output market access problems. And various dailies across the country and in the region basically highlight farmers' lamentation around facing constraints in accessing output market, because they face issues related to information asymmetry, low prices, low bargaining power, and the likes. And we identify three main constraints that may restrict farmers from harnessing these digital tools, digital services to address their output market access problem. The first is around the lack of information on the benefits of e-commerce. Farmers may not have the necessary information on how to harness e-commerce to solve their output market access problem. They also have constraints related to credit. They have credit constraints because they don't have the necessary funds to invest in digital tools or services, and they may not be able to buy subscription to access the internet. Then the third constraint is around digital skills, digital constraints, because farmers don't have the necessary skills to actually use these tools to access markets. So we posed two main research questions to sort of understand and address this constraint. The first is, what is the impact of digital literacy on farmers' demand for digital market platform and their access to the output markets? And actually, how can we actually build farmers' capacity to promote the adoption of digital tools? That is, who should actually receive digital literacy training? And how should we implement a digital literacy intervention? So our paper relied basically on three main bodies of literature. The first is around technology adoption. We drew insights from Laurie Beamer's American Economic Review paper on network theory targeting and technology adoption. And we also drew insights around literature on digital literacy, because now no one really knows what digital literacy is. Is it about ownership of mobile phones? Is it the use of mobile phone to actually just using mobile phone for using sake, or to use mobile phone to access important services? Then we also relied on literature on e-commerce. Most of this literature is in China, looking at Faber's paper in the NBR on how e-commerce integration help with economic development. So we launched a randomized control trial by randomly allocating around 255 farming households across 3 states in Nigeria to different groups. And we collaborated with different partners. The first partner is an online agricultural marketing platform, Agripo. And this partner provides logistics and insurance services to help farmers move their products from the farm to their customers. Then we also partnered with a digital consulting firm to design digital literacy intervention, and we partnered with the government body overseeing the digital space in Nigeria, called NITSA. And we collected a few data sets. We collected some qualitative data set. We did quantitative data set, one baseline study and 2 follow-up studies. And we also collected some webometrics data from the e-commerce platform. I won't be speaking on that today. So just to give you an understanding of our results before I go into what we did, in case I'm unable to complete my presentation. So basically, from our results, we were able to find that digital literacy actually has a positive impact on farmers' demand for e-commerce and their access to the output markets. And the digital literacy intervention is actually the direct training of farmers that has impact on farmers' output to output market. First is that it leads to a positive impact in the number of times farmers visit the platform. That is, it increases their probability of visiting the platform by 5 to 8%, and it also increases their probability of listing their product on an e-commerce platform by around 2%, and it increases their probability of selling through the e-commerce platform by around 1%, and increases the value of sales via the e-commerce platform by from around 1,200 to 1,800. And it also increases their willingness to use the platform. And combining with agents actually mutes these effects, and the possible mechanism of effects via which digital literacy is linked to farmers' access to the output market is through increased ownership of mobile phones, increased digital skills, and not really through reduced transaction costs. But we find that farmers with high initial digital skills and those that live far away from the market benefit more from this training compared to other groups of farmers. And also female farmers that have smartphones benefit more from the digital literacy intervention than other groups of farmers. But then female farmers that make agricultural decisions and are heads of household are less likely to benefit from this intervention. So this is our experiment setup. We randomly allocated around more than 3,000 households. We randomly allocated at the community level. We allocated to one of 4 groups. The first group, that's T1, received only the training. And the idea behind this is to test if the lack of digital skills constrain the use of digital marketing channels. And farmers received around 8 hours of training to expose them to actually learn how to list their product on the digital marketing platform. Then the second group of farmers, second group of communities, that's a T2, include communities where we had agents. Each community was asked to nominate one person to act as the community agent, and the agent then received the basic digital literacy training and with an entrepreneurship component. Then they also received like the startup kits for them to be able to set up a store and offer the service in the community to help farmers list their product. So the idea behind this is to test whether the lack of access to finance or technology constrain the use of digital marketing channels. Then the third group of communities had a combination of the two to reinforce households' confidence in digital marketing by increasing information through training or agents. Then we had the control communities. And our descriptive results now. We find that here, because of the way we selected our communities, all the households have at least one person with a mobile phone, but then there is many of them own basic or feature phones. And mostly there's gender inequality in ownership, especially ownership of smartphones. If we compare female-headed versus male-headed household, and even within the household, there's inequality in ownership of smartphone. Then on phone usage and awareness, many of the households basically use their mobile phones to make calls, to listen to music, and to send text messages. And many of them are aware of platforms like Facebook and WhatsApp, and just a few, like 13% of them, know what any popular e-commerce site in the country. So there is poor awareness of digital marketing too, and also low phone usage for essential farm-related or agricultural-related activities. So in terms of digital knowledge, there's a significant need for improved digital literacy, and about 50% of the farmers scored 0 in the digital skill assessment test we gave them, and many of them were unable to identify the basic features of the smartphone. So this is the balanced test we did. We found some significant results, but controls for this resulting in our estimation. But yeah, the calculated normalized difference to account for mean difference size, it's below 0. It's small, and there's no potential imbalance issue. But then we still accounted for this in our regression equation. So this is our specification. We use intention to treat effect, and we ran ordinary least square or linear probability regression based on depending on the outcome variable of interest. And our ITT, we use the pooled sample. We also ran the intention to treat at midline and the intention to treat at endline. That's like around 2 years after the intervention. And we controlled for outcome variables measured at the baseline. We also controlled for the control measured at the baseline, and the strata fixed effects and the follow-up fixed effect. So the first result is showing the treatment effect on digital platform visits. This one, this particular variable measures whether the household actually visits a digital marketing platform or not. And we found that when you directly train farmers, there is around 5 to 8% probability of the farmers actually visiting a digital marketing platform. Then the second group outcome measure is looking at the effect on usage of digital marketing platform. That is whether the farmers actually list their product on this digital marketing platform. And we found also that when farmers actually receive direct training, there's around 2% probability of actually listing their agricultural products on the digital marketing platform. And we find some positive impacts for the pool group, but then I'll speak more on this later. Then for these, we measured the impact on selling. We focus on 3 main variables. That is whether they actually sell their product on the platform, the value of sales on the platform, then the total value of sale. For the total value of sale, there's really no effect, but then we found a positive effect on the probability of farmers actually selling their product on the platform, and they can make the increase in value is as high as 1,800 naira on sales for farmers that receive direct training. Then we looked at effect on demand for digital marketing platform, and we found that farmers that actually received direct training are more willing to use the platform, and they are willing to pay as high as 10 naira or 18 naira 2 years post the intervention for listing a product of around 1,000 naira on the platform. Then we did some robustness check to see if the treatment is relevant. We explored the Westphal Young multiple testing adjustment, and we found no evidence that all treatment effects are null 1 year or 2 years after the intervention. And also around attrition and contamination. For the attrition, we found no differential attrition between treatment and control groups. And for contamination, we addressed this during the design phase by focusing on communities that are far apart, at least more than 2 kilometers apart from each other. Then we explored the mechanisms of effect. We focused on four main mechanisms through which the intervention can lead to. We focused on 4 main mechanisms through which the intervention can lead to increased access to the output markets and increase in demand for e-commerce. The first is increase in digital skills. The second is the increase in the use of mobile phone, the purchase of new mobile phones. Then the third is the increase in the frequency of visits to the digital marketing platform. And we also explored the reduction of transportation costs, the cost of transaction. And for digital skills, we found that direct training is actually linked to increase digital skills, and farmers that received both had access to the agents and also received direct training are more likely to have increased digital skills. The second is a mobile phone purchase. Farmers that had access to rural marketing agents are also more likely to purchase new mobile phones at least 1 year post-intervention. Then the frequency of visits. For the frequency of visits, farmers that received direct training are more likely to visit the digital platform, and the frequency of visits are also more likely to frequently visit the digital marketing platform. But we found no significant effect for true reduced transportation or transaction costs. Then we explored the heterogeneity for farmers with low versus high digital skills, and we found that when farmers have high digital skills, they sell more when they receive direct training than when they receive training access to agents. So the impact for farmers that receive direct training is also relevant in this case. And I will speak more on that when I conclude. Also, based on women's decision making, when they make agricultural decision, when women make agricultural decision either solely or when they make joint decisions within the household, there is reduced probability of actually listing their product on the digital marketing platform, and also reduced probability of selling their agricultural products on the digital marketing platform. Also, when farmers own smartphones, they have increased probability of selling their products via the platform. So in conclusion, our results show that digital literacy is important for Apple market access and demand for e-commerce. And like I mentioned, it's actually through direct training of farmers that we can get more positive impact in the short and the long term. But by combining this intervention, combining the training with local agent access, it mutes this impact over time. The explanation behind this is that skills constraint is a major issue in boosting farmers' adoption of digital tools to access market, and not necessarily credit constraints. Then the intervention impact is specifically relevant when farmers have basic digital skills and live far away from the traditional markets. And the intervention should also be targeted at increasing household ownership of mobile phones, especially of smartphones, especially among the female farmers. But we are still exploring the data, especially when it's around the agent characteristics. We're trying to see farmers' exposure to the agents to help us better explain the results we see around the impact of agent access to farmers' adoption of digital tools. And we are also exploring other relevant variables. Thank you.
All right, so Khadijat did a wonderful job summarizing her paper, so I'm going to skip that part of my discussion. And it looks like you've done a lot of work since the version that's available on the survey, on the program. The paper generally, I think, makes three important contributions. The first contribution is it highlights the importance of digital literacy in constraining the effectiveness of supply-side intervention, which has been the focus of a lot of the interventions in this space. In addition, as Khadijat pointed out, rural e-commerce is a growing and an important area, and she, in this paper, she and her co-authors show, or they provide detailed evidence on how digital literacy shapes participation in e-commerce. And then I think the other nice contribution of this paper is, maybe you didn't tease out a little bit here, it's on the kind of the different modalities of increasing participation in e-commerce. Should we be training the farmers, or should we be targeting champions or selected agents within the village? So I have a few questions. One is on the concordance of the results, which may have changed since I think the version on the website is based on the midline, and here you have the second midline. But the one thing that came again and again, and which I also noticed in your current presentation, is T1, which is the training only, is effective in increasing participation. On the other hand, T3, which has the training of farmers plus the agent, actually does not have any effect. So, which is kind of surprising, right? They're getting this additional support through the agent. So, in essence, it's actually saying it's taking away from the farmer training. So, what explains that? Another also inconsistency is if you look at the effect of T3, which is again this dual intervention, it has a significant effect in increasing the probability of advertising on the platform, but you don't see any effect on usage of the platform or visits. So how are they advertising? Is it the agents maybe doing this on the behalf of the farmers? And then related to that, and you didn't present it today, but you actually have an amazing data on administrative data from the platform on the use of the platform. And that figure in your appendix is you see this kind of massive rise in utilization of the platform following the intervention. And I thought, which kind of it goes against what you find in the survey-based measure. So I think it may be interesting to incorporate this admin data to run the analysis. I'll talk on that a little bit more as well. And the other thing I noticed is at least in the version that I have, there's substantial imbalance in the pre-treatment characteristics. I think in the table, which wonderful for you showing it, there's like 12 out of 26 cases you can reject the null of no difference. I think it's okay for the observable differences since you control them. What makes me more concerned is about what are the unobservable ways in which these groups are different. And I think even if you can't address it directly, it would be helpful to discuss that in more detail and then caveat the analysis. And the treatment is randomized at the community level, but the paper didn't have any detail on how within a community how treatment was assigned. Did you also randomize which households were getting it? Was everyone eligible? And in that case also, what is the take-up? In the paper, you mostly show ITT. I'm curious to see actually what the effectiveness is for those that actually attended, took up the training. Sorry, I'm timing myself. And maybe you moved away from using Anakova in the current version. Is that? Yeah. Okay, good. Because I didn't understand it either. But I think that's the right move. Is just focus on the OLS plus covariates. And also, I had questions about the timing of the midline survey, which I think was done in September. And I wasn't sure whether you were able to capture participation output market, given the harvest time is a bit later, right? In the context where you're studying this. And then the other thing is to whom do farmers typically sell, right? So when we think about the value of advertising on the platform, typically these are smallholder farmers where relationships between sellers, long-term relationships, matter for these transactions. And so, like, who's the target audience for the advertising, which partly may explain why you don't see that much effect on actual sales, even though there's an increased participation. And there was also a substantial difference between the treatment, particularly T3 and the control group on plot size. I think the average from the table is like 22 versus 5. And that's where you found like a significant heterogeneity, at least for the midline results. So I'm curious to see how much of this is being driven by, this heterogeneity is driven by the baseline differences. And the other thing is, I think that one of the things that makes your paper really interesting is this role of the agent. It would be interesting to present more details about how they're selected. It looks like it's a collaboration between the researchers and the community in deciding them and deciding who to include. What are the factors correlated with being an agent? And part of your motivation for including the agents is to understand how the kind of their social network or social position may shape the diffusion of this new technology. And so I thought I was expecting to see some sort of heterogeneity by the profiles of agent characteristics. Like if you have data on their network position or their social position, I think that would be interesting as well. And then related to that, it's also not clear like what could be driving the interaction effects. Like what's the conceptual framework for why there should be complementarity between the agents and then having the farmers being trained. In fact, so far it seems like they're taking away the effectiveness of the training. So maybe if you could provide some evidence on that. And then my last point is kind of, I think the paper has a huge importance in terms of policy implications. It'd be helpful to delineate what is the market failure in this case. Like why isn't the platform going in and doing this if it makes them profitable, if it increases the usage, right? And so what's the market failure that's kind of being addressed or that's necessitating this intervention? I'll stop there.
Okay, thank you very much. Those are lots of comments for us to think through. I'll just answer a few. We're still thinking through the agents. We have agents data set. We interview the agents across time. We haven't presented results on that yet. So we are trying to explore the demand for agents versus the supply and exposure of the farmers to agents to see if we can use that to explain some of these results when we explore the agent characteristics further. But then we feel probably the agents, farmers do not trust the agents enough to go to them for to help list their services. Probably people are trying to hide what they harvest. I don't know. This is just me speculating. Then the webometrics, we'll still look at that. And like you said, the paper you read is at the midline, and based on what I presented today, we've looked through the end-line data, and we're getting more insight to better help us explain the data set. Then, exploring the ATT to see who actually attended the training. Yes, we are looking at that too, because we're able to collect information during the training to see who actually attended the training, and we'll use that to check whatever results we have. I'll leave the other comments. I'll speak with you later on that, so that's not to waste time. Thank you. Yeah, sorry. Sleeping.
Quick question. So two things. What do the farmers, what do they need to register on the platform? What are the requirements? Then the second thing is, do you also look at other e-platforms that this farmer could access, and to see if there are maybe a major transaction cost higher than the relative e-commerce platform or if there are adoptions of other platforms?
Okay, so for the AgriPool platform that we collaborated with, the training was actually done on AgriPool. But then we didn't, it wasn't like 100% on AgriPool. We also exposed them to other possible e-commerce platforms they may use. And for them to register on the platform, they only need their email address, which we took them through during the training. They were able to get their email address, some people's phone numbers. So it was just a basic details, nothing too complex, well, I believe. But it was just basic, your name, email address for you to register on the platform.
We have time for one more question. You choose.
Yeah, anyone. Okay, Barbara.
Okay. So I'm wondering if the agents also have an instrumental role in like mobilizing just normal marketing mechanisms that are not necessarily through e-commerce. And if that's why this might be muting the effects of e-commerce, because people now have a sort of coordination mechanism and get connected with just better sellers through analog channels.
Yes, we collected information on agents' relationship with the farmer. So we will look at that to see probably how frequently do you speak with this particular person from the farmer's perspective and also from the agent's perspective to maybe explore this and see if maybe there are other things the farmers do with the agents and not necessarily through the e-commerce platform. Yeah. All right. Any other question? Okay, you can ask your question. Yeah. Joel, yes.
I don't know if
I'm allowed. It's a short one.
Yeah.
Go ahead.
Okay, just that was really interesting. I was just wondering how you deal with complementary infrastructure such as road, because roads are very important to engage in e-commerce, and I guess that people have not equal access to last mile roads, and that would be something very very interesting to get into to better understand.
Yes, that's a new area, like another area for us to consider. But for this study, we didn't really focus much on roads. But then for the e-commerce platform, we expose the farmers to, they provide insurance service to cover for losses during transportation. So maybe that. But then in terms of road networks, we really don't. So that's probably an area for us to also look at.
All right.
All right. Thank you very much.
You want the same system?
Sure. Yes. Yeah. All right, everyone. It's me again. So I'm Mesay Gebresilasse from based at Amherst College, and today I'm going to talk to you about a project on how resettlement affects the agricultural productivity of origin locations. To motivate this issue, over 2008-2015, an average of 25 million people were internally displaced due to weather-related hazards. And land degradation has reduced the agricultural productivity of about 23% of land globally. And this is expected to exacerbate the displacement of people internally. On the other hand, several studies document kind of the persistence or substantial misallocation of workers in rural areas that are facing lower levels of agricultural productivity. And there's increasingly consideration of planned resettlement as a way of mitigating kind of the effects of demographic factors and climate change has on reducing agricultural productivity. So it's important, I think, to consider how these population relocation schemes affect socioeconomic outcomes and origin and destination locations. Much of the literature on population resettlement or relocation has focused on what happens to the destination locations and the people who are relocated. In this project, I focus on what happens to the origin locations and the people that were left behind. So in particular, I study the effects of outmigration shocks on agricultural productivity using a government-mandated resettlement program in Ethiopia, which was implemented over 1984-86, that relocated internally over 600,000 people. And this relocation scheme provides a unique opportunity to study these issues for several reasons. One is the main rationale was environmental adversities, in particular a severe drought that occurred in 1984, and then land degradation in the highlands. And also, unfortunately, the resettlement was implemented in a very rushed manner, and then there's some evidence that people were also forced to resettle. And so the nature of selection of who gets to move is very different from voluntary migrants. And there's also substantial variation in the resettlement intensity, even after accounting for drought and land degradation. And it's partly because of the arbitrary way in which this policy was implemented, and it came to a sudden end also because of a lot of external pressure. And given that this happens in the 80s, it also allows us to examine the long-run effects of these types of relocation schemes. So to give you a little bit of background, both non-planned and planned resettlements have a long history in Ethiopia. The 1984-86 resettlement was particularly unique given its cause, scale, and then the spatial patterns of distribution. So this graph shows you the SPI index, which is a common measure of drought severity. The more negative it is, the more severe the drought. So you can see 1984 was a year of severe drought in Ethiopia. Essentially, the SPI index was more than 2 standard deviations below the long-run mean. And subsequently, there was a famine that was widely reported across the globe. And this put a lot of pressure on the government that was already facing a lot of criticism. And so the government implemented this emergency resettlement scheme, planned out in a very hasty manner. But to give you a little bit of background for their justification, so in 1984, about close to 90% of the population lived in the central and northern highland, which accounted for less than 40% of the area. So there's very high population density. And then because of the high population density and continued land overuse, about 50% of the area was significantly eroded and not usable. In fact, the government had commissioned a study to exactly look at this, the effect of this high population density. And the government argued that they needed a permanent solution that would help people who are in their framing, who are stuck in these origin locations, to relocate to other parts of the country where land was presumably available for use. So the main objectives of this resettlement program were to resettle about 1.5 million people, mostly again from these drought-prone areas. And then the idea was to move them to other parts of the country where land was arguably unexploited for development purposes. And then the goal was to make them self-sufficient within 3 years. However, the program was severely criticized by international leaders and NGOs from the outset, partly because of the forced nature of the resettlement in some instances. And then NGOs in particular were also concerned about the use of famine relief to implement this large-scale policy in the middle of a huge disaster. And the program was implemented in a very hasty manner. And in fact, the plan was drawn in October 1984. Within 6 months, they've moved 340,000 people. So this shows you the monthly number of people who were moved. And then the program came to a halt by 1986, and after which point about 600,000 people already moved. But this was far short of the 1.5 million people they intentionally planned to move. And so because of this implementation, there's substantial variation in the resettlement intensity. There was a resettlement in about a fourth of the districts. Within the districts where there was out resettlement, the mean was about 4.7% of the population was relocated. And most of the resettled came from the northern highlands, which and then some also from the central highlands that were densely populated. And then they were relocated to southwest or west part of the country. And as I mentioned earlier, consistent with the arguments that the policymakers had made, the factors that predicted out resettlement, one is, of course, the drought severity. So generally, resettlement locations tended to be those areas that had severe drought in 1984. And also population density, which is shown on this graph, also tends to matter. In particular, for those in the south, they tended to come mostly from high dense areas. And I will look at what the correlates of out resettlement are using a regression framework, consistent with the figures. You see that population density matters. So in the first column, I don't include the Auraja fixed effect. So you can think of Auraja as our one level above district. And proximity to the famine relief camp also matters, which may be picking up accessibility as well as potential severity of the famine. They tend to pick, those districts tend to have a lot more people sent out, and also drought severity matters as well. But, within Aurajas, like in the second column, a lot of the factors don't really predict the share of out resettlement. And part of it is because of the arbitrariness in which the policy was implemented. But so generally, whereas districts that faced that were more dense, more suffered drought in '84, and cultivated more land were more likely to have people sent out. Within Auraja, there's those factors have limited explanatory power, and part of this could be, as I said, the way it was implemented. Actually, the government had set national goal for how many people they wanted to settle, which they then delegated to the provinces, and then provinces delegated goals or targets to Aurajas, and then districts, and so on. And so these centrally imposed quotas actually have substantial explanatory power in determining how many people were sent out from each area. And because of the hasty way in which it was implemented, there wasn't substantial or sufficient consideration of local factors to decide how many people should be sent out or relocated under this scheme, which is, I think, what generates this variation in the intensity of resettlement. This is a quote which highlights the capriciousness of the ways in which it was implemented. So David Gorgis was at the time the head of RRC, who was in charge of implementing the resettlement program. And then, he argued that this program was neither a function of or a result of research nor long-term planning, right? And that it was a spontaneous act, which I think partly contributes to this exogenous source of variation that you see in the variation of resettlement. So why would we expect resettlement or out-resettlement to affect agricultural productivity in the origin location? So I think it's helpful to think about the challenges that those places were facing. In particular, as we saw earlier, there was substantial incidence of land degradation and in the origin district, and high population density in origin district. So it's natural to ask, why don't people move on their own, right? Why do we need such a program? And part of it is, I think, a function of two things. One is between 1960 and 1984, so over the 2 decades preceding the resettlement, the Ethiopian population essentially doubled. And over during that period, also there was a drastic land reform that essentially took away land from or abolished tenancy and private ownership of land. And then peasant associations were assigned the task of redistributing land, and there was a limit of maximum of 10 hectares per person. And so what this meant is in combination where you have people are less mobile, partly because of land market frictions, and also kind of ties with ethnic homelands. They were less likely to move. And at the same time, you have this kind of explosion of population. So you have land being divided over and over across a generation, which leads to a lot of land fragmentation and degradation. And this is also something that the policymakers who were in charge of this were kind of highlighting. And so resettlement could affect the agricultural productivity of origin location essentially by potentially facilitating the relocation of people who are stuck in the origin locations by reducing the cost of moving, because as I mentioned earlier, essentially the government was able to move people, often the whole household or substantial number of members of a community, and also promise them land and access to resources in the destination locations. And so it kind of reduced some of the barriers that limited internal mobility. So it may improve agricultural productivity in the origin locations by potentially lessening the population pressures on environmental outcomes, and therefore reducing land fragmentation and degradation. And then to the extent that it reduces or it helps for increased land consolidation, it may also facilitate increased investment in complementary investment that are correlated with larger scales of production. It's also possible that the resettlement may change the composition of the steers, because generally the people who are more likely to move were those that were landless or had limited access to land. Okay, so this project has required heroic amount of data collection efforts. I had to digitize census of resettlement areas from 1988. And then because of lack of consistent data on agriculture outcomes, I had to combine essentially different sorts of data sets. There's a general agriculture survey reports, which I was able to find through interlibrary loan for 7 provinces, which has data on agriculture outcomes in 82 and 83. And then since 1995, we also have consistent measures of agricultural outcomes from the annual agricultural sample surveys. So I combine these data sets and use the 1984 district boundaries to harmonize them to that. And then I also digitize reports, province-level reports from surveys done in 66 and 74 to get at land distribution. And then I also use some remote sensing data sets to look at kind of alternative proxies for yield, and then to look at land degradation. So the main empirical strategy is a difference in difference design, where I'm comparing districts with a high and versus a low out resettlement intensity. And then I also include district and year fixed effect. So this to account for any time invariant factors that may confound the effect of resettlement intensity, and this for any aggregate shocks. And I include in all the baseline specifications the direct effects of the drought severity in 84 and population density, given their correlation with out resettlement and the potential effect those variables may also have on the outcomes of interest. And then all the errors are I allow this standard errors to be correlated spatially up to 500 kilometers, and then at the district level serially. So here's the main result, essentially, where I look at agricultural productivity, which is measured as log yield. So that's the total output divided by area. And then again, so this is the effect of the share population out resettled after the resettlement. You see across for cereals, or if you disaggregate it by crops, is out resettlement has a positive effect on agricultural productivity. In particular, a 1 percentage point increase in the share of out resettled population results in about 3.4% increase in yield. So I also run the event study specification of this, and there's only like 2 pre-periods, so you can interpret this with some caution. But there are no differences pre-treatment, and then you see a persistent difference, but that's declining over time, potentially as the benefits of this relocation are going to be washed out in the long run as population relocations probably converge to the initial equilibrium. And then a bunch of robustness checks. So, in particular, I show that the results are robust to using an instrumental variable, where I use what I mentioned earlier, the district level quotas, so predicted quotas based on the government targets to predict the actual resettlement intensity, and the results are fairly similar. And I also use NDVI to proxy for agricultural productivity. Part of the advantage of using this is it's also available for the periods or the years where I don't have actual measures of crop yield, and the results are fairly similar. And I also show the results are robust if you use kind of define the treatment on the extensive margin, so any versus none, or if you use logs of the population resettled. And I also show that the results are robust if you control for additional correlates of out resettlement, like initial levels of income that we may be concerned that could be correlated with out resettlement and could have an effect. And then I also run a placebo exercise where I randomize the treatment status across districts, and then estimate the same specification and do this 10,000 times, and then you see essentially that the randomized inference-based p-values are fairly consistent with the baseline results. So what explains this increased effect? In general, if you look at the kind of the heterogeneous effect of the treatment, the gains in productivity are larger in the places with less land access at baseline, and that we're using their land more intensely. In addition, the poorer districts with lower access to farm implements, potentially because of the lower scales of production in those areas, tend to benefit more. And then when you look at the effects on population density, long after the resettlement, so this is using census data from 84, 94, and 2007, the resettlement districts origin districts still have lower population density. And so this suggests that potentially the reduction in demand for land may have facilitated more productive redistribution of land. In fact, there is some evidence that the resettled were prevented from returning to their origin location, at least during the Derg regime. And so, in fact, there were a few people who were brave enough to defect and try to migrate back to their destination location. And partly why they did that was to, ensure their property rights on their ownership of land. A lot of them found that their land had been distributed in the interim period after the resettlement. And then, so in fact, if you look at effects on land distribution and fragmentation, this is all suggestive evidence because I only have our Raja level data for this analysis. We do find that the share of farmers with lower land holdings decreases in the origin districts, whereas the share of holders that are in the medium and larger land holding increases. So this suggests some sort of land consolidation happening, or potentially could also reflect differential selection of migrants. But you also see consistent results on fragmentation. Origin districts are less likely to have fragmented land holdings. And then when you look at measures of land degradation, this is based on annual data from 1982 to 2006, remote sensing data on the share of area that's barren, so no vegetation or covered by trees, by short vegetation. So, this captures potentially land degradation. So you see that resettlement origin districts, after resettlement experience improvements in land degradation. So the share of area that's barren decreases, whereas the share of area that's covered by short vegetation, which could include cropland, increases. So in combination, this suggests that it's possible that the resettlement may have eased land degradation in origin locations. So to summarize, exploiting the variation in resettlement intensity across origin districts, I look at what the effects of large out-migration shocks are on agricultural productivity. I find that agricultural productivity, whether using crop yields or this remote sensing-based measures, increases. And there's suggestive evidence that out-resettlement may have improved land distribution in origin location in a manner that reduced the effects on the environment. However, I do want to caveat the full effects of this program or this policy are very complex. A lot of people, unfortunately, died on the way to the resettlement site. Some of the resettlement sites were also catastrophic failures. So there could be hard to quantify non-pecuniary losses. And may have also led to land dispossession in some of the destination locations. And I actually have another ongoing work. This is part of a broader research agenda, where I look at the incidence of conflict. And there's actually a greater incidence of conflict, civil conflict, in the destination locations in the last few years. And so you have to take these things into consideration when evaluating the policy.
Thank you so much. And yeah, this was really a great paper to read. Really impressive work done. I really learned a lot, and I was reading it with great interest, but also often just with my mouth open, like, what happened? Yeah, let me jump into this. So let me skip the recap, other than that I wanted to say this is really impressive work. And it's clear that you have a lot of detail. It's really nice to see all the context in the paper. Really, it's really a recommended read. Also, the data that you needed to digitize, you can see that a lot of work went into this. So yeah, and then there's all the robust results. I think it's quite convincing, the story that you're telling here. I see that the font doesn't go entirely well, but one of my comments, or what I was confused about, is that the resettlement is really coming out of a number of provinces up there in the north, and then some of these highlands there. But it seems like the data that you're using is including entire of Ethiopia, so all districts. You're saying you're removing the destination districts, but I'm wondering why you included provinces throughout Ethiopia, even those in the east, for instance, because they're not very comparable to the highlands where population density was a big pressure. And wouldn't it be more of a natural experiment if you really exploit the variation just in those provinces where the resettlement was happening? Also, you are controlling for province fixed effects, but it's in a way just artificially inflating your sample size if you're including those other locations, because there was no variation in resettlement there. So maybe that's something that either needs to be clarified or that you want to look into, and showing that your results are also robust if you focus on just provinces where resettlement was happening. Also, the agriculture outcomes that you digitized, is it correct they're only available for one of the 4 provinces where resettlement was happening? And is that maybe why sort of you had to include those other provinces? Maybe kind of look into that. Then another comment I had is that agriculture productivity is not the inverse necessarily of land degradation, but is often interpreted that way. I think in your talk now, it came through a little bit more clear that really the reason that you're talking about land degradation is coming from the barren land that you have from the NASA data, but that didn't come through so clearly in the paper. And so I kept thinking, well, there's a lot of different mechanisms that could be explaining this, not just land degradation, but also maybe there's economies of scale now because farmers have more land. And so it makes more sense to invest in modern inputs. And maybe that's driving the agriculture productivity effects. So can you, get more data? Or do you have soil health indicators, for instance, to make that more clear? And in fact, there was a quote in the paper that's all blurred here, but that was saying, there was like this sort of crowding in of complementary inputs. So do more. And then the paper, kind of the first part up until the conclusion, is written as if we're evaluating this policy, as if we would actually want to consider like recommending this to governments. Sometimes I got that impression that we're evaluating this policy as if it's actually like a policy option. And that I think is more sort of in terms of how it's written, and only in the conclusion you get to sort of, there's these horrible, non-pecuniary losses. So throughout the paper, I kept wondering, do we actually see this as I think it's in terms of how to frame it. And we're trying to learn from this, what is the effect of an exogenous shock that moves people away, and what is the effect of the reduced land pressure, without considering this as something that might have immediate policy implications in terms of this type of resettlement program. So, yeah. And I'll share these slides with you. A very nice paper.
Yeah. Thank you for all these comments. I think I could look at the robustness to just restricting to origin districts only. And part of the advantage why I included the other one is to identify general trends that are happening in the country over this period. But yes, the identification within the origin district would be stronger. The data stuff, I could look for the more recent years possibly, but yeah, it's going to be a little tough to get data on at least pre-treatment, but I could look at maybe just the cross-sectional variation on post-treatment outcomes.
I think one of the factors contributing to what Berber is identifying and framing is this emphasis on the out-migration regions. So is there a component of the analysis that can focus on what happens to places that receive all of these relocated populations? And you have this big gap in the data, so you can't say anything about what happens immediately, it seems, although maybe using the NDVI you can. But in the longer term, can you talk about what happens to those places, just as a way of providing a fuller assessment of the net welfare effects of this kind of a forced migration?
Yeah, I mean, definitely. I think what's happening in the destination location is very interesting. It's partly why I don't include it in this is the nature of the treatment is very different. What's happening in the destination locations, and then if I really wanted to make any claim about welfare effects, there are all these non-pecuniary issues that are going on. Kind of like Berber pointed out, I think I should clarify. The goal for this paper is to use this horribly natural experiment to study what's the effect of out-migration shocks in places where people are stuck. Right? There's the
effect's not surprising, right? You've got high population integrated. You forcibly relocate a bunch of people and you see improvements in that location. So by focusing on that one location, it's really stacking the deck in terms of the kind of policy strategy.
Yeah, definitely. I could add in the short run, at least there isn't a huge effect on productivity, because these were places, some of the places where new settlements where there was no previous establishments or villages. So it took a long while for them to become acclimatized. So I could include what's happening in the destination location. But I would still be very hesitant to like make claims about, is this a good policy or not? At least, yeah. Sorry.
I have a question about the change in government that happened after the Derg and the shift in the kind of political power and the political economy of the country in terms of which groups kind of moved into positions of power and how that changed.
Yeah.
How do you factor that in? How does your model consider that? Is that captured by some of the fixed effects, or how do you conceive of that kind of massive shift?
Yeah, so for the aggregate shock, for the year fixed would account for it, but you may be concerned about the differential shocks, right? Particularly places in the north could be trending, or Tigray, for example, could be trending differentially. Actually, Tigray is not included in my study, not by choice, but the reports from the Tigray region are not available. So where I would just expect kind of a bigger confounding effect would be in Tigray, for example, from this regime change. But that's not driving any of their analysis because it's not included in my sample. If you have any idea on how I could get, okay, I've tried this in Ethiopia. I've gone to a bunch of libraries. Where is it? There we go. Nope, it's the data section. So, yep. So I am looking for these books from multiple provinces. So I only got it from 6 or finally 7 provinces from a library in Michigan. So, but they didn't have it in Ethiopia. Okay, I'm supposed to be chairing, so we're done unless there's one more question. But yeah, okay, that's it. Thank you.